Welcome to the episode, everyone. Today we're diving into tokenized real-world assets in DeFi. It's a fascinating blend of traditional assets and cutting-edge blockchain innovation.
I'm really excited. So tokenized real-world assets. Can you break down what exactly that means?
Sure. Essentially, tokenized real-world assets are physical assets, like real estate, fine art, even intellectual property, that are digitized and represented on a blockchain as tokens.
Yeah.
In other words, these tokens represent fractional ownership over something that's tangible in the real world.
Right. So by breaking up a high-value asset into smaller tokens, a broader range of investors can get involved, correct?
Exactly. It's like you no longer need to shell out huge amounts of money to invest in, say, a piece of prime real estate. Instead, you can purchase a fraction, and that dramatically increases accessibility and liquidity in the market.
That's pretty revolutionary. And liquidity is a key word here. Can you expand on how tokenization impacts liquidity?
Absolutely. Traditional markets often have fixed trading hours, but when assets are tokenized and placed on a blockchain, trading becomes available 24/7.
Yep.
This means that the tokens can be bought and sold anytime, which not only enhances liquidity, but also allows for a more dynamic market environment.
I get it. This also means investors can quickly adjust positions. Now, what kinds of assets are we talking about? Real estate, art, you mentioned IP as well?
Right on the money. The tokenization process can wrap nearly anything: real estate, fine art, commodities, and even intellectual property. It's about turning these assets into manageable, tradable units. This openness is redefining what people consider investable.
That's intriguing. So how does the actual tokenization process work? What are the steps involved?
Well, it begins with identifying and evaluating the asset. You need to determine its value and decide how many tokens it should be divided into. Next comes legal and regulatory compliance. This is crucial because rules differ by jurisdiction. Then, you develop smart contracts on a blockchain platform, like Ethereum, which automates the token's creation and management. Finally, these tokens are listed on a marketplace for trading.
So the process is quite detailed, starting from proper valuation to ensuring that all legal bases are covered. But isn't the regulatory landscape, a bit of a minefield?
Absolutely. Navigating regional laws is a significant challenge. Some projects even use special purpose vehicles to help meet those legal requirements. This step is non-negotiable if you want to avoid serious legal repercussions.
Right. And speaking of risks, security seems to be a recurring concern. What kind of security challenges are we facing with these tokenized assets?
Good question. There are several issues here. Digital tokens can be susceptible to hacking or fraud, which means robust custody solutions are absolutely vital. On top of that, smart contracts need to be ironclad. A single vulnerability could lead to asset loss or manipulation, so security is as critical as the tokenization process itself.
Yeah, got it. I see. It's clear that while tokenizing assets has huge potential, it also opens up new areas of risk. But then, how does this all tie into DeFi specifically?
Great question. DeFi, decentralized finance, generally uses digital assets and operates on blockchain. By introducing tokenized real-world assets, you're like bridging the gap between traditional finance and the decentralized world. This not only widens the portfolio options for DeFi users, but also provides a more stable foundation by incorporating assets with established market behaviors.
That blend of stability and innovation must be attractive, especially for institutional investors. But is there any skepticism about mixing these two very different worlds?
There's definitely some debate. Some critics argue that incorporating physical assets into a digital ecosystem might introduce valuation discrepancies and regulatory conflicts, though many believe that with solid custody solutions and continuous regulatory evolution, these challenges can be managed.
It sounds like a balancing act. On one hand, you have increased liquidity and accessibility, and on the other, regulatory and security hurdles that could, potentially derail adoption.
Exactly. It's a trade-off. The tokenization of assets does lower costs for management by cutting out many intermediaries like paperwork and legal fees, but at the same time, it demands an entirely new framework for compliance and security.
Yeah, I follow. Let's talk about transparency for a moment. How does the blockchain factor into that?
The blockchain plays a pivotal role in ensuring transparency. Every transaction is recorded on an immutable ledger, meaning you can't easily alter ownership records. This level of clarity reduces the chances of fraud and builds investor confidence. It's like the system holds everyone accountable with a permanent record.
That makes a lot of sense. But don't you think that such openness might expose sensitive data potentially?
Yes, that's a valid concern. With all this transparency, there's always a risk of exposing details that might be considered private. That's why these systems need to strike a balance between openness and privacy. Robust encryption and data protection protocols are essential.
Now, when it comes to future trends, where do you see tokenized real-world assets heading in the DeFi space?
The future is pretty exciting. As regulatory frameworks become clearer and blockchain technology improves, we might see tokenization expand beyond real estate and art into areas like intellectual property and even carbon credits. There's also talk of integrating IoT for real-time asset monitoring, which could further enhance security and transparency.
I can see that having a huge impact. It seems like this trend has the potential to radically change how we invest and manage assets across the board.
Definitely. It's like unlocking a door that was previously shut to smaller investors and traditional financial participants alike. With tokenization, nearly anyone can invest in high-value assets without needing massive capital up front.
Absolutely. Aren't there concerns, though, about ensuring market acceptance and maintaining liquidity? If the market doesn't take off, could that, undermine investor confidence?
That's a critical point. For tokenized assets to really stick, there must be active marketplaces and sufficient trading volumes. Otherwise, you could see liquidity issues and valuation volatility. In essence, sustainable adoption depends on how well these platforms can maintain active, fair, and secure trading environments.
Yeah, that makes sense. So looking at the bigger picture, how do these tokenized assets contribute to the overall stability of the DeFi ecosystem?
They enhance stability by diversifying the asset base within DeFi. By including assets with established real-world values, the ecosystem can reduce its reliance on and susceptibility to the typical volatility seen with many cryptocurrencies. This makes the whole space more attractive to investors who are seeking predictable returns alongside innovative financial products.
Interesting. It almost sounds like tokenization could act as a bridge, inviting traditional investors into decentralized finance. Is that a fair assessment?
Absolutely. It democratizes investing, opening doors to those who might have been sidelined by high entry costs and complex regulations in traditional markets.
Yeah.
This blend of conventional and digital finance might be the key to fostering broader institutional interest in DeFi.
Yet, there's still that inherent risk in shifting from conventional asset management models to these new paradigms. Do you think we might see, iterative improvements as the technology matures?
Oh, definitely. Much like the early days of the internet, tokenization is in its infancy. There will be iterative improvements over time as developers, regulators, and investors find the optimal balance between innovation, security, and regulation.
True. So, in a way, this is just the beginning of what might eventually become a cornerstone of modern finance.
Exactly right. The transformative potential of tokenized real-world assets isn't just about better access or liquidity. It's about fundamentally reshaping how we perceive and interact with valuable assets.
Thanks for walking through this. It sounds like while the challenges are non-trivial, the prospect of mixing traditional investing with DeFi through tokenization opens up a whole new world of possibilities.
Yeah, it really is an exciting frontier. With continued collaboration, innovation, and cautious progress in regulation and security, we're looking at an ecosystem that could revolutionize how wealth is accessed and managed globally.
Absolutely, no doubt about it. Well, that's our deep dive for today. It's been a fascinating conversation on bridging the physical and digital worlds through tokenization in DeFi.
Indeed it has. Thanks for tuning in, everyone. Until next time, keep exploring the future of finance.